Okay, I think you're good to go.
We're good to go. Okay, thank you.
Uh-huh.
All right, welcome everybody to What's All the Hype. Today is going to be a great opportunity for us to learn a little about multifamily, kind of how to identify it, why it's important, and how it could benefit your bottom line. And doing some of the smaller stuff you can identify by yourself as residential agents. And then obviously with the larger and being able to get referral fees from commercial people like myself. And today we have a special guest on the show. Robin Huerta is going to share a little bit about his transactional experience with was that a duplex in Los Angeles, Robin?
Officially, it was a duplex, yes. And it was one big building that was just over 5,000 square feet. And it had a total of 16 rooms and 16 bathrooms. And then, 2 kitchens, 2 living rooms. It was really set up for student housing.
Super. Well, I think that's going to be a great lead into how quickly these things can get out of control. And if you're not prepared and where to go to and find the answers to how all that works, I think it's really important. So your story is going to be a really neat part of our story today. So we're going to start off with multifamily. I'm sure there's a lot of people here that have done some transactions in that 2 to 4 unit space. And we're going to talk about what those look like. And then obviously things that are a lot larger than that. And just give you an idea of how to identify them in your marketplace so that you can drive by something and maybe realize that there's opportunity there and where to get the information and who to talk to and maybe help yourself to a larger commission. Obviously, that's why we do this for a living, to make money, right? And help people. So starting with multifamily, 37% of households in the US are rented. And I think that's a little larger these days. That data we got, I think, about a year ago from what I'm reading here. So that's shifted a little bit larger, probably more like 40% is rented right now. And institutions have always looked at multifamilies as a great opportunity for return, right? Put their money to work, they collect the rents, they get the apartments, let's say the big ones, the 150, the 300 unit apartments, getting a return on their money and investing. But for most of us, a 350 unit purchase is kind of not where we're at. And getting clients like that, institutional clients like that as agents or brokers can be difficult. So when you're riding around in your car and you're looking for opportunity beyond the single family home, where do you find multifamily and what does it look like? I mean, it's real simple. It's not a hard equation. So you're looking for the 2 to 4 units. You can identify them. I think in the local market here in Long Beach, they're real prevalent. I think there's some areas in Torrance and in some of the South Bay that have a lot of these duplexes and fourplexes and triplexes that were built between 1920 and 1965. Some of these great old places that are owned by the same people for a long time that create opportunity for people to come in and invest, including agents and brokers. I mean, there was a way for you to make extra money or create a retirement in a self-employed job like we have, then the rental units are definitely something that you want to look into and saving your money to put money down and hopefully creating some passive income for yourself down the road. So what qualifies as a multifamily housing? So of course, we looked at the big glass towers, the multi 350, 400 unit places, but also these 2 to 4 unit are really, really a strong part of the marketplace, only because there are a lot of them. They don't always pencil out for institutional investors. So there's more of a play for regular investors like you and I to buy into these, and they're easy to identify, right? You see a single family home, you drive by, there's a large driveway, and there's some units in the back with some garages. You can assume that there's more than 1 unit, could be 2, could be 3, could be 4 or more. And I think a lot of times in the residential focus where it should be, you can miss out on these opportunities. And so what I suggest that you do if you're looking to get yourself into a higher price point or investment real estate for your clients, that you drive around the neighborhoods in which you sell or outside those areas and look, drive by. You'll drive by, you'll see single family home, 5 in a row, and then you'll see a multifamily, sometimes 12 unit with underground parking, especially in Long Beach, where a long time ago, probably, I'm going to say in the 70s, zoning became like a free-for-all, free range zoning, and they were able to build, they would tear down retail malls and they would build a multi-unit apartment in a residential neighborhood. And it looks odd even today when you drive by it, because you'll see like 5 homes and then there'll be this 30-unit apartment building. And you're like, how did they ever get that built there? Well, it happens, and it'll happen again down the road, especially now that Long Beach has increased its need for multifamily housing and the money they've taken from the federal government to build housing. So we'll see some of that zoning become a little more flexible here in the near future. But it's defined anyway as 2 or more adjacent housing units that share physical systems such as roofing or heating. It could also mean 2 townhome style residences on the same lot for a duplex. They can also be different styles. Now, multifamily, the garden variety, what they call garden multifamilies, are 3 to 4 stories maximum. And you'll see a lot of those in places like Long Beach and in Torrance. You'll see those around. They usually come with no parking. So they're usually their parking stalls, or sometimes they come with subterranean parking, it just depends. But those are the garden apartment buildings. What I kind of want to focus on today is kind of that 2 to 4 unit, and then I'll get into some of the larger units, give you an example of one of the multifamilies that we just closed downtown in Long Beach. But identifying these is really important because they offer a lot of opportunity for you as the agent to make some more money, because the price points on these things, like a duplex, can go for $1.5 million, $1.4 million just in Long Beach in some of these certain areas. And they're a great price point. And most of the time, people have to put more than 30% down to purchase them. And with 40 to 50% down, they can actually have a positive cash flow. It means that they're making more money than they're putting out, and it means an investment return for them. And I think when you drive around Long Beach, when you drive around your area, wherever you meet, Los Alamitos has got a really large untapped area over by the base of multifamily. Those are usually larger than the triplexes and fourplexes, but there's a lot of opportunity there. If you drive, I think, let's see here, I'm going to say north of Spring Street, or south of Spring Street, and north of the Seal Beach or the Los Alamitos Mall over there. I think there's a ton of those, especially when you get a little bit north of Rossmore and to the east of Los Alamitos Boulevard. Drive up and down and look at those, because we're looking for opportunities for people that have owned them a long time, people that have owned them for generations, that are looking to sell because they've owned them so long. They have tax reasons that they want to sell. They have no siblings. They have no kids. There's a lot of things that drive the need for people to sell these. And one of the things that we're evaluating right now is what generational cycle we're in. And the cycle that we're in leads us to believe that there are a lot of people over the age of 80 years old that have owned these for a long time in certain pockets. And there's going to be a need for them to exercise their exit strategy, just in even the 2 and the 4 units. What are you going to do if you own 10 4 units? You've got 40 units, 40 doors that you own. You're 80 years old and you're looking to exit the business because prices are really high. And those are the people we talk to on a daily basis to find out what plan they have. And so when you're identifying these, drive by, you get the addresses, you're trying to get in to talk to the ownership. And it's that simple. I mean, you can get a list from title of all the different duplexes and fourplexes in the area on a block and call those people and find out what they're doing. The first question out of your mouth should be, are you interested in taking a look at accepting offers on your fourplex on Farquhar in Los Alamitos? Well, we've been thinking about it. And then find out, well, what's your plan to do once you sell it? Because Mr. Seller, most of my clients right now have an easier time selling their properties. Not to say that's not a challenge to get the highest and best price, but there's a challenge on the other end of what are you going to do with your money? Are you just going to pay your taxes and be done with it? Are you going to trade it into something else? You know, there's a lot of options for you, and we want to make sure that you've kind of gone through those before we even talk about putting it to market. And you'd be surprised. A lot of people are thinking about it. Some people, there's all sorts of reasons, but we believe that there is definitely a generational cycle coming. And then there's going to be a group of people that have no one to give it to. And not everybody is going to give it to the church. Not everybody's going to give it to a nonprofit. So there's a group of ownership that's not going to exercise some sort of exit strategy that doesn't include selling the property. And those 2 to 4 units have been popular forever. I mean, Belmont Shore is kind of notorious for those things. You know, we grew up in down here in Long Beach, and those things were always rented. They were always owned by somebody. And those types of buildings that were built between 1920 and 1965 have a tremendous value. They've been through all the earthquakes. They've been through, there's so many great things about those properties that make them great investments for the next generation. So in identifying them, when next time you go to an open house, the next time you go to a listing appointment in a single family home, take the time to see if there's any multifamilies around where your listing is. Because you could be surprised, you may be able to find an opportunity where you're looking for that listing opportunity or that listing appointment that you're going to. And just driving around, identifying them by site. And once you pick up that there's several there, then get back with your title rep and find out what you can do about getting in touch with those people. So that's kind of like, you know, real quickly about multifamily on the small end. On the apartment end, the garden 4 stories or the big towers or the large units, obviously you can't miss those. You drive by, you might run into one. So those are a whole different animal because they have an evaluation cycle that requires to put pen to paper and to make it look appetizing for the investor that's coming your way. The 2 to 4 units don't always pencil out very well. They're location oriented. If you've got a duplex down in the shore and it's $1.5 million for a duplex, 30% down is not going to cover your total cost with mortgage, insurance, and taxes. But overall, over location, you've got some money to park there, like a lot of these investors do. It makes sense. On the larger scale, the large apartments, the numbers have to make sense and they have to meet the marketplace and the return they're looking for. And I'll get into a little bit of that here when we look at how we evaluate apartments and the quality of those apartments and what it means. But does anyone have any questions so far?
Well, I have a question because
Yeah.
I have 2 clients who are actually looking for duplexes. One wants to really move into one and then have the other one pay for part of the mortgage.
Okay.
So I do have addresses. How do you go about but like what's your script, for instance, to when you call these property owners?
Well, if I have people that are currently looking, and I know for a fact that I could write an offer today for that particular property, then that's exactly what I tell them. You know, I've acquired these buyers. That's what I do, and they're interested in moving in. Instead of buying a single family home, they want to buy a duplex and live in it and have the rent help them. And I know you've owned this for a while. Would you be interested in selling it today? I mean, if you actually have them in your pocket, it's great, because what you don't want to do is start off the relationship with I have a buyer and come up short.
Right.
Don't bullshit the sellers.
No.
That's not a good idea.
Yeah.
There was a question in the chat and let's see here. Where's the chat?
It's what is the best way to evaluate a good deal for a 7 to 12 unit building? Rent roll, cap rate, etc.
Well, the best way to do it is to have a spreadsheet. Let me share this screen with you. I'm not going to get into evaluating any particular deals today because it does take some doing, but oh goodness. Let's see here. Share screen. There we go. Share. Can everyone see that? Does everyone see the spreadsheet there?
Yes.
I do.
Okay. So this is a spreadsheet that we use to evaluate our multifamilies. And this particular sheet breaks down everything from cost per unit to the current cap rates, which is the current performance of the rents based upon rent rolls that we have. Takes into consideration a lot of stuff. And I'd be happy to go over it with anybody in detail at another time. But this is kind of an evaluation sheet and tool that we use to help with our clients in evaluating whether we can take it to market for them at a certain price. And, you know, I'd be happy to get into it, go deep later, just let me know. But to give you an idea, this kind of spreadsheet also allows us to give them an idea of price choices they would have depending on the market and what they want to do. And we also do the very end a net sheet, just like you do in residential. We give them an idea of how much money they're going to be pocketing at the end of the deal, or if we're not going to be exchanging the property in a trade. So the best way to do it would be to do something like this. But I do have to say that if you have an idea of what the rent rolls are, a very good way of evaluating just off the top of your head on a multifamily in today's market, just kind of give you a good bearing, would be to take the annualized rents, right? So you take the monthly rent, multiply it times 12, it gives you gross rents approximately, right? Multiply that number times 80%, that gives you kind of maybe where the net operating income, right? What they would net after expenses, not including your mortgage. And then divide that by a percentage of return you're looking for. So divided by 4.25, and that number spits out will be a number for pricing. And if someone gives you the price, you can divide those numbers any which way you want to give you an idea of what they're looking for. So if the number in today's market, let's say someone wanted in this example, 2.1 million, and the cap rate on this is like below 4%. Is it too high or is it too low? It just depends on what the market's doing. And that's an evaluation, or someone you talk to, any one of the commercial agents, they'll give you an idea and help you through what those numbers should be like. But it's kind of an in-depth analysis on what it should look like and how to utilize the numbers. So that's kind of how actually, we get into evaluations. You get into what kind of multifamilies are available. And you've got Class A, you got Class B, you got Class C, to make it kind of simple. Class A commercial stuff is really in good shape and great location, right? And then, Class B is like one step below that. And overall, they may lack the prime location, but overall, maybe all they need is maybe some paint and some carpet on the multifamily. And then Class C is kind of really bad shape, really bad location. And that can be a problem unless they're looking to redo the property, which leads me into some questions for Robin.
Oh,
Because Robin's transaction, and she'll share with us here, was kind of like that, right? They rebuilt it. Tell us a little bit about it, where it was, and give us your story.
I was close to Exposition Park in USC, just south of Martin Luther King Boulevard. And it was a single family home. And the zoning was, I believe, from the start, duplex. So the old home that was a fixer was torn down. This was actually before I met the sellers. So they were pretty far along already when I came to the scene, so to say. But they turned it into a duplex that was, since it's so close to USC, they really set it up for student housing. So it had one big building. It was with 2 addresses, and both units had 8 bedrooms and 8 bathrooms, and then their own kitchens and whatnot. So that's kind of what the setup was. And it was, yeah, new construction. Took quite a bit because there's a lot of rules and regulations, but LA, but Long Beach as well, they really want people to build multiple units where there was just one single family at the moment. That's what you see in Long Beach too, for instance, in the neighborhood that I'm at. Everybody is turning garages into ADUs, it seems, which is another topic maybe, because parking impacted stuff will be here in 5 years. People will be pretty annoyed. But yeah, so that was the LA property. So it was just a duplex. So that's how we handled it. Although I did receive interest from commercial agents as well. But it was, yeah, it was bought as a duplex.
So how did the number of beds and some of the internal changes inside the structure itself that impact the way that you had to sell that property at all, or was it able to just go straight across as like as a duplex?
As a duplex, yeah, everything was signed off on, so that was not a problem.
The city of LA didn't have any special requests in regards to that. They just,
well, they may have had, but everything that needed to be done was done by the sellers before I got to
got involved.
yeah, got involved.
Okay.
Yeah.
So what was ultimately at the end of the day, how big was the lot that you sold? The lot and then the land, you remember?
Just under 6,000 square feet.
And the building?
The building was about, or is about 5,000 square feet. So
And what was the purchase price? What was the purchase price?
2.4.
Okay. And did that have any particular performance numbers that you calculated for rent and what they thought they could get?
It was rented out, and it was just to really fill up the property. The rents were pretty good.
Okay.
I was asked not to give too much information about that, so I have to, and now it's recorded, so I cannot tell you everything about that.
That's okay. Well, that's a unique story, because I think, I mean, obviously in a university area, that probably isn't as unique as it would be in other areas, but where you're taking a single duplex and making it into a dormitory, really.
Yeah.
Right. So, and getting involved in the process where you're representing the seller after the fact, after they've remodeled, rebuilt, and done all the work, made it a lot easier for your transaction, more of a duplex, right? Like a 2 to 4 unit.
Yeah. Yeah.
Okay. Yeah. All right. So, yeah, and so that works out to be a great story, because it's an easier transaction. It's something that you could expect to see in a normal duplex, right? Where there's just 2 units, you know, maybe each unit has 2 bedroom, 1 bath, or whatever.
Just a very intense avid.
Right, right.
Yeah.
Yeah. Well, thank you for sharing that, because I think, you know, as we see a lot of these changes coming, housing developments, the ADUs, for example, become more popular. You're going to start seeing a single family home with an ADU in the back, and all of a sudden you've got a duplex in an area where you had a single family home for all these years. And that's a perfect example of, where you're going to see changes in the look and feel of some of these neighborhoods, right? I mean, Belmont Heights, where you've got a 10,000 square foot lot and somebody puts an ADU in the back and access through the alleyway, going to look a little different.
Well, and in Long Beach, there's the map of the parking impacted zone, which is now up to PCH and in different parts of the city. And we have friends who live in the Circle area, where there's now neighbors turning a single family home into a triplex, and there's no parking already. And one of the ADUs is the garage. So that's going to be very interesting to see how that is. It's kind of like what happens in the 70s. Everything was possible. Put this apartment building in the middle of the neighborhood and everything's fine. I don't know if it's going to be fine for a long time though.
Yeah, and as the parking impacted portion of it, if you actually have a property in a parking impacted areas, how's that inspection going to look like next year when the garage is the ADU and the garage inspector has to come out and take a look at it? I mean, I guess it's not going to be a problem because they've written it off.
Yeah.
Right. So it's going to be interesting to see how that impacts the area, especially in some of these areas above the heights and where there's not a lot of parking and people have to park on the street. It'd be interesting to see it. That's typical, right? They figured out a way to create more housing, but they haven't figured out the parking problem.
Yeah.
And we'll figure that out later, right? I think one of the reasons, in fact, one of the main reasons we're talking about multifamily today is because economic trends tend to push these multifamily developments and housing over time. And I'm looking at some of the statistics. Just an example I'm reading here, baby boomers retire, about 250,000 people turn 65 every month. So they tend to seek smaller homes that require less expensive and effort to maintain. And some of those urban and suburban multifamily properties appeal to these people. And so as some of these single family homes are selling, some of these multifamily opportunities, especially in certain areas, these A properties or maybe even the B properties become something they want to buy because they got a ton of cash. They can rent them for maybe less than what they would normally be paying their mortgage for. Not in all cases, of course. But when it comes to affordability, there's a strong demand for accessible housing, primary and secondary urban markets like up in the Heights or even a little bit farther away in East Long Beach or even Lakewood and some of those other areas as well. So it's really important that we're talking about this today as a topic because you need to identify these multifamily properties as part of your business plan. I mean, a large certain percentage of your business should be coming from these 2 to 4 unit deals. And if you can identify the larger ones and need help on those, obviously, but it should be a percentage of your portfolio of gross commission dollars for sure. Because I think you're missing out on opportunities there if you're not doing some of these all the time, because obviously they not only do they give you some great commission dollars, but they also put you in contact with people that down the road, when someone takes, let's say, a property that wasn't in great condition and makes it better and sells it for more and wants to do it again. There's, year to year generational transactional dollars for you there too. Not everyone's just going to buy one and park their car and say, I'm done. Some of these people are going to look and buy several of them and then move on to something else, because the theory behind it for investors is eventually you want to collect all of your checks from one address. You don't want to run around town to 75 different single family homes collecting checks, because that becomes a lot of work, regardless of how much money you might be making. So it's really important to understand the practice and why, but at the same time, there's a push for more affordable housing. There's a push for people to live in some of these as even first-time home buyers. I mean, I don't know how many of you have ever pushed your first-time home buyer to push a little bit further out and say, hey, why don't you buy a duplex instead of a single family home? So you immediately have a rental in the event you want to move out of here and upgrade to your next purchase. Does anyone come across that before? Well, I have, damn it, and it's been fun. It was so, I mean, like when they have the ability to buy something a little larger because the rents on the other unit allow them to purchase something a little larger, they kind of get over the fact to be sharing space with somebody for a little while. But in the long run, they usually end up being a really good rental opportunity or an opportunity to do something else down the road.
Right, and most of these owners of a duplex, it's very likely that they have more than one property in their portfolio. So it's also a great way to become friends with them and have more income on a regular basis, just because they have more properties than just a regular single family homeowner.
No,
Notice that a
absolutely.
lot too.
Absolutely. Absolutely. There's a question here about exchanges and multi-units or triple net shopping centers. We have opportunities. We can help with those as well. There's Susie's asking questions about that. Yeah, just get a hold of me and we can help you put together opportunities. We're currently sourcing a few right now, 2 retail centers. We're actually teaming up with another agent out of the Beverly Hills area on a 300 unit apartment building. So we're bringing that to market as well. But if you have any trade needs or what have you, just give us a call, let us know, we'll be able to help you. I think one of the things we talk about in multifamily a lot is, where do we find these people? And as someone who did residential real estate, one of the frustrating things I had with residential real estate was getting a hold of people. In commercial, people's information is a little bit more readily available. So we pay, we pay a lot of money per month for application software that gives us that information quite readily, or at least we can cross-reference a couple different ones to find these people eventually. And we're doing it on a daily basis. So a lot of the work that we do is on the phone. At least a lot of the work that I do is on the phone. And that's kind of how I was taught. We do a lot of social media posts and things like that to find investors. But we do a lot of work just creating a network of people through phone calls, people that have purchased property in the past, but that contact information is readily available for us. So if you come across something and you'd like some information, obviously title can help you, but we can also help you get a hold of those people as well. We're doing it all the time. We spend, 3-4 hours a day calling and on the phone. It's part of kind of the commercial, the way we do business. I always found the stuff for residential harder to get a hold of people. And maybe it's just because I'm not any good at it, which is fine. But I just, I just found it harder, and it's a little easier to get a hold of these people. They're not always as willing, but the data is more available. So we spend a lot of time and have that readily available at our fingertips on a moment's notice. And if you ever need help, let any of us know, and we're happy to help you. Does anyone have any questions right now? None?
I did.
Go ahead.
My wife and I used to own a 4-unit apartment building, and we sold it. And this sounds fascinating. Is there a way to get in touch with you and do a more in-depth talk about this and how we find these people? Because I truly enjoyed it. I had a client that I actually did what you said. They wanted a home, and I put them into a home with a, I guess you call it an ADU this time, but it was actually a small unit in the back, and they're in love. They constantly thank me for it. They said it's the best thing they ever did.
Yeah, I mean, we're happy to help. Anything that you need, I'll put my email address here, and you contact me. We can talk about it if I can help you, and just identifying some stuff for you. You know, obviously, if that's helpful, that's what we kind of do here. I mean, that's why KW is a little different than most places. We're here to help and love to see you guys be successful. I mean, there's nothing better than watching somebody pick up a fat check off of a large commercial purchase, you know, a multifamily where you're making some good money. It's fun to see. I love doing it myself. Every time I pick up a check, I have a smile on my face. So I know that that's important. Any other questions or concerns? Has anyone ever thought about investing in multifamily themselves?
Oh yeah.
With the dollars that they make here?
Oh yeah.
I think that's really important to talk about, because I think a lot of people don't take advantage of the opportunities they have around them. You know, if you save a couple shillings, you know, and you've got opportunity to buy something, you know, buying a duplex, being in an area where you could afford whatever that may be, and looking in depth and how, you know, the rents work over there or wherever the location may be, is always a good place to start, you know, and a really good opportunity, like I said, to create income for yourself over time. I will tell you that, go ahead, Robin.
Do you invest out of state as well, or do you have a network of commercial agents that are out of state that you work with?
I have a few in a couple different states. I don't pretend to be a master of, you know, every state, so I look to those people for help.
Mhm.
I know Brad Jones here in our office is investing in Oklahoma. And he's got a relative or something like that that's buying homes, and the rents work out there. And I have only owned in Arizona and Nevada out of state over the years, but it's totally doable. I think, you know, it's just a matter of education, a matter of risk tolerance, you know, making sure that you're doing the right thing and working with the right people. But I know that the referral approach we have here with Keller Williams, you can get in touch with people in those market centers, and, you know, I think that's a great question, because leveraging our relationships with other franchises is really important. Otherwise, you could be talking to someone and not have a secure feeling that someone's doing right by you.
Right. Yeah, because that's what I'm working on right now, is to get relationships with realtors in Arizona, Nevada, Idaho, Tennessee, Florida, Texas, just to make sure that I can help my clients here, because last year, I think 4 or 5 left the state. And it's great to not have to think about, oh, where do I get this referral source from? You have those relationships already.
Yeah, and there's also people doing business here that have relationships that I'm not aware of, other agents, other brokers that I know that go out of state to look for deals, and they come back, and so I'm talking to them about who they're using, and how they found those opportunities. And, you know, I mean, Brad was a perfect example. You know, the purchase price on the home out there was $105,000 in Oklahoma, and the rents were really quite good. And I think with 30% down, he was able to cash flow at a couple $100 a month. And, you know, for some people, you know, $100,000 is more their marketplace, right? I mean, Around here, 100,000 barely gets you a EMD deposit. And that's, that's just expensive around here.
That's one day at Disneyland.
Yeah, right. One day, that's right.
Hmm.
I think one of the things that's really important to know, if you haven't written anything down, this is something you need to write down. There's three things that investors look for in real estate, at least most of them. They look at the return on their investment, right? So I'm gonna put money down, and how much money am I going to make per year, percentage wise? They look for return on equity. So am I buying something that's going to gain equity over time in the time frame in which I want to own this, right? Because equity gain's kind of relative. If I'm going to only keep it for 5 years, is it going to grow enough for me to make enough money to make it worth my time? And then the third thing is cash flow. How much money am I making per month before taxes, right? To find all three in an investment property right now in California is tough to do. And if you found one, you should ring the bells, sound the sirens, and tell everyone you found the one, and you'll find a ton of people that come running to pay a high price for it. So it's really important to understand what is important to your investors or your clients, in which one of those three, in which order. Let me give you an example. My goal as an investment real estate investor is cash flow. So I'm always putting a lot of money down in order to make sure that the cash flow coming is a positive my way, that I'm not writing a check every month to own the real estate. So my deposits and down payments are usually pretty heavy, but that's important to me. And I feel like the money that I'm putting in the real estate itself is going to be safe there because I'm going to own it for a long time. I'm not looking to flip it in 5 years, 3 years, 6 months. So those two things are important to me. My return on my investment sometimes, because of the amount of money I put down, is poor in the short term, right? It's not the kind of return that most people would like to see. But my mentors have always been some of these people that have owned for a long time, and I liked what they did, and they always told me that, they always overpaid a little bit for the one they liked the most, but they still owned it 25 years later, and it's making a ton of money for them. So make sure you know which of the three are most important, and which order is important for your investor. And if they come to you and say, I need all three, and they need to be numbers that are significantly higher than you think you can perform, then don't waste your time worrying about them so much.
Okay.
And sometimes it hurts to let go of clients, but at the same time, you don't want to waste your time. So that was really important lesson I learned from my coach and my mentor when I got into this business as an investor in the 90s. And I think that's important for you as an agent, that you understand your client, what they're looking for that way. And, it can be frustrating if you bring people good opportunities, you don't know why they're not buying from you. Like, well, this is great. Why aren't you buying? Valuation's 50% down. This thing is great. Well, sometimes they're not really buyers, right? They're just kind of looking around. Sometimes I know I'm getting approached a lot by some more friends of mine lately, but people raising money to buy in groups. And I would just say, be careful with that. Putting together a partnership or an LLC together to buy real estate can be a risky thing if you don't know everybody and everyone doesn't have the same exit strategy, right? So if you got 4 people and 3 out of 4 want to keep it for 25 years and you're looking to get out in 2 years and you didn't ask that question, it can be a little hard for you down the road there to get out of it. So just be careful in doing that, because obviously a lot of people raise money together, right? Everyone's got $100,000 and all of a sudden we've got enough money to put down on something significant, but everyone's got to be on the same page and gonna have some experience doing that, and who's counting the money, blah 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 blah. Does anyone have any questions about the types of real estate, the Class A, Class B, Class C? Sometimes we look at those, we call them, the core product, core assets are ones that you just put the money to work, right? You invest the money, you don't have to redo anything. The core plus products are carpet and paint and some, maybe a kitchen or two. And then, of course, we've got opportunity and investments, which are value add, where you come in and you redo every unit. That's just kind of the ABC of the multifamily. Does anyone have any questions about those at all?
Why are some of those on the MLS and then other times they're not? Does that depend on the agent?
Yeah, so most of your multifamily agents and brokers that do a lot of volume or are good at their job will list it everywhere. They'll list it on the MLS, and they'll list it on CoStar. Crexi is another place where they list them. That just comes down to if they got a good system and they're putting it to market so that everybody gets a chance, so the seller can leverage the highest and best price on the marketplace. And then, of course, if it's on the MLS or even wherever you may find it, there's got to be double checking your numbers too, because sometimes the information is only as good as the people putting out the product, right? And sometimes that information isn't always the best or accurate. So you want to have a lot of conversations with the listing agent or the broker to make sure that everything is good.
I think there's another question.
Yeah, I'm reading. Is there a specific sheet? Well, the spreadsheet that I have is a good sheet, but it's definitely, if you're not an Excel spreadsheet person, deciphering it in a good investment. I think what I would do is I would say this: if you have something and you want to take a look at it, we can take a look at it together and give you an idea of what it is. You can learn. I think you need a coach or a mentor to learn how the process works, because just crunching out numbers doesn't always give you what you're looking for. Every building, every multifamily has a story. Sometimes the stories are even more important than what you see in the rent, because you're not quite sure what's happening. Why is something undervalued, right? Why are the rents so low? What's going on there? And the stories will just boggle the mind. Well, these 4 out of the 16 have been here so many years, and my mom gave us the building, and we don't raise the rents, and we haven't remodeled, and or we remodeled but we didn't raise the rents. I mean, there's all sorts of different reasons that something's a really good investment, and the story behind the asset sometimes is more compelling for how to get a deal done than the actual numbers sometimes. So there's so many parts. I mean, right?
Has the eviction moratorium slowed things down or made things different?
I think the biggest thing about the moratorium in LA County has been the billable hours of the real estate attorneys involved in helping all the landlords. I think there's a tremendous amount of money to be made by real estate attorneys right now. Because if you're going to go through an eviction process, in fact, this is a really good question, Robin. If your client comes to you and says, in fact, we had one today, I've got a tenant and we got all sorts of problems, I want to evict them, I'm just referring them to a real estate attorney, not even getting involved in that process. It's just more than I could even begin to explain.
Yeah, because it used to be with, let's say, when the crash was happening, that banks had all these homes and there were still people living in there, and it was like, oh, here is $1,500 cash for keys. But I don't think that is happening anymore in those amounts, if at all.
Yeah, I think it's case by case, block by block. I mean, I've seen people offer $20,000 for them to leave and not leave.
Oh wow.
So it's cash for keys. was something that people did or still do. It's just more expensive. The time for evictions, how that's all going to play out, is going to move us into 2023.
Yeah.
You know, so that's going to be a long process. And some of the transactions, give you an example, some of the transactions happen with the non-payment people. So you have tenants that aren't paying, and that comes into play, into credits for the buyer in relationship to, has the seller been reimbursed through the programs that they have available? Has the tenant applied? Have they been denied? Who's taking care of that? All that paperwork has to be disclosed to the buyer, right? Because they want to know what they're getting themselves into. And it can be complicated. So those are areas in which you need someone that's dealt with that before to be guiding you, especially if they don't have an attorney. Then, you know, I mean, there's a lot of problems with that right now. You know, COVID created quite a mess. And we find that some of the, let's say who's trying to do your Avid, let's say, right, on some of these 2 to 4 units, people aren't letting in because they have COVID.
Right.
Can be a problem. No one knows what the inside looks like. And everyone's seen that movie. If you haven't, watch it. What can happen to the inside of your apartment building? So, I mean, that's a huge problem, but don't give legal advice. Just refer them to a great attorney. We refer out to Bruce Menke here in Long Beach, one of the best in the business. He's a great tax attorney as well.
Okay.
Any other questions or concerns or? Surprised I haven't heard anybody ask about commissions. Usually, you know, money hungry agents are always like, how much they pay in commercial, right? So those all vary. You know, we take our listings at 6% and go from there on the multifamily. That's kind of normal for the marketplace. We also do business opportunities, and those have a little higher commission associated with them because of the pricing, but you can expect to get, you know, anywhere between 2 and 3%, depending on what the agent or the broker has negotiated. And in this particular case, in this market, most of the stuff is going to market. The off-market stuff doesn't have as much value because no one wants to trust just one person all the time to give them the value of their multifamily. They want to see what the market can bear. So if you're listing, let's say if you're listing a multi-unit and you want to take it to market, most of the people that you're going to get a highest and best price from are someone who's involved in a trade that doesn't want to pay taxes, right? Capital gains, they want to exchange it. And they'd be willing to pay a little bit more so that they don't have to pay taxes on their capital gains that they have. And leveraging the market for those people sometimes gets you a really much higher price than you anticipated, right? So that's a good rule of thumb in talking to people and your potential sellers as well. Well, Robin, do you have anything else to say before we take off? Thanks for sharing your story.
I wrote some things down. I love the what are the investors looking for? 1, 2, and 3, ROI, return on equity, and cash flow, and finding out what is their number 1, 2, and 3, because that can differ. I think that's very helpful. So, yeah, thank you.
No, the other thing to add to that is when they're buying is to find out what their exit strategy is going to be.
Yeah.
Because that can help you in negotiating prices for your buyer, right? It's like, well, you know, let's say you're down to that $50,000, that $60,000 difference, right? So an investor or, you know, a person that's going to hold it for a long period of time, what's the risk in overpaying a little bit for something that you really like in the location that's really excellent? Right?
Right.
So you can have that conversation if you understand what they're going to be doing with that property as well. You know, the famous line I always like to use, I haven't used it in years, only heard it once, but I always like it is, well, you know, I'm not going to really sell it until I die. And, you know, when might that be? Right? I mean, that's kind of the question you ask. What's your exit strategy? And what's that going to look like? You know, so. Well, that's it for today. That's all I got. Anybody else have anything to say or comments, concerns, critiques? That's it.
Thank you, Jason. Thank you,
Okay.
Robin.
Thank you. Have a great day.
Thank you,
Bye.
guys.